Hello there. So in our last video, which is given in the card here, we had spoken about what is debt equity ratio and why is it important for us to understand, especially when you are either investing in the shares of that company or you are even trying to invest in that organization through non-public ways. So if you actually want to understand how to calculate debt equity ratio, this is a very short and quick video on that. So we are going to pick up some favorite scripts or some popular scripts from the market because those balance sheets are very easily available in the public domain. The same formula you can use to calculate the debt equity ratio of any company that may be in question or in discussion with you. So should we shift our screens and start calculating the debt equity ratio? Let's do that. So now let's understand how to actually calculate debt equity ratio of your favorite equity share. So let's quickly go to a website. Let's go to Money Control. It's one of the most popular ones. You can pick up any other website that you like and just write the name of your favorite script. So let's me take Reliance Industries since it's one of the most popular scripts right now. Now when you go to Reliance Industries, obviously this will give you all the summary of its prices, volumes, highs, lows, etc. What we are really looking for is financials here. So let's just go to financials. Now, when you click on financials, you'll see tabs here of balance sheet, profit and loss, etc. So let's go to balance sheet because we are actually looking for debt and equity, which is a part of the balance sheet. Now, when you click on the balance sheet here, you see the details are given here, and we'll try and remain on standalone. We can even take up consolidated, but to make it very simple, let's stick to standalone. Now, when you go to standalone balance sheet, here you see the whole details are given. So now to calculate debt equity ratio, let's open an Excel sheet parallelly. So what is debt equity ratio? Debt equity ratio, as the name suggests, it's basically debt divided by equity. Now, what is equity? Equity includes share capital, it includes reserves and surplus. So, share capital is basically what the owners, shareholders, promoters have brought into the company, and reserves and surplus is what they have earned and accumulated over the years, which they could have taken as dividend, but they have chosen to reinvest into the company. So, equity will be a total of this plus this. Now, what is debt? Will include long-term loans. So, it will include bank loans, it will include debentures, uh, it will include NBFC loans or any such long-term loans. It will also include short-term loans. Remember, it is not going to include current liabilities, but short-term loans. So again, the same banks, NBFC debentures, and debt will basically be a total of all these. Okay, so this will be what the debt will be, and this is what the equity is. Now let's pick up the numbers from Reliance Industries for 2020. So if you see for 2020 annual 12 months, the equity share capital is 6339. So let's put it here 6339. Then let's put up reserves and surplus, which is 418244, 418244. So here you see we receive the equity or the equity capital, or which is basically the total capital which the promoters, owners, shareholders have invested in the company. Now let's pick up the debt. So what is debt? Debt would, if you see here, it is long-term borrowing. So this is basically outside loans. We will not include deferred tax. We are not going to include other long-term liabilities and not even provisions. Now, in the current liabilities, we are actually going to pick up the short-term borrowings because this again means that these are loans which are supposed to be paid within a year's time, but they are actually debt. Again, the balance three are part of current liabilities or transactions of money which is due because of the daily buying and selling of the company. So this is something that we are not going to include. This is something we are not going to include. We'll only pick up short-term borrowings and we will pick up the long-term borrowings, these two things. So what is the long-term borrowing? 178,751. This includes bank, etc. and everything. And the short term is 51276. So let's write here 51276. So what would be the debt equity ratio? The debt equity ratio will be the debt, which is this amount, divided by this amount. So what does this come to? This comes to 0.54. Now, if you do not have so much of time, you don't have to worry. Here again, the ratios are also reflected. So once you click on ratios and you go to, if you go to leverage ratios, which are, so this is balance sheet. So we have to go to, technically it should be reflected in leverage ratios, but here for some reason they've actually reflected it here under profitability ratios, which is completely wrong. But then it's here. So even if you do not have so much of time to calculate it, you can simply go here and check out this ratio. So what is it? It's 0.54, which is what we have calculated. Now, just to summarize this for you, let's just calculate the same for 2019 also. So what do? We go to the balance sheet and financials, then we go to the balance sheet, and then we look at 2019, which is here. So the equity share capital is the same. The reserves and surplus was obviously changed. It's just 398,983. So it is 398,983. The share capital is the same. And this is the total of the equity, which is also matching here, 50532. Now let's calculate the long-term borrowings, which is 118,098. So 118,098, and the short-term borrowings, which is 390,97. Here is the total. Now again, let's calculate the debt equity ratio, which will be debt divided by equity, which is coming to 0.39. So if you see between 2019 to 2020, Reliance Industries leverage has increased. It has from zero point 0.4 or 0.39, it has gone up to 0.54. Now let's just recheck if our ratio has been correct. So here you see. So this is as quick as that. It just takes about 3 to 4 minutes to calculate the debt equity ratio of any of your favorite script. So you can analyze here, you see the overall leverage of Reliance Industries initially had gone down a little, but it has now straight up gone from zero point 0.3 in 2018 to 0.54 in 2020. Let's see how 2021 is going to be for them. So I hope this is how you can easily calculate the debt equity ratio. You can understand why is it important by referring to our other video. And I hope to see you guys more often in the next session. And do tell me which was the favorite script that you calculated it for and how it went about.